And welcome to the Baguette Investor channel for a new weekly review. Every single week I review my performance, my portfolio holdings, and the technical analysis of the financial markets. And I tend that I would like to go a little deeper into fundamental analysis because I think it's a very useful thing, but I suck at it, so it will come in the future. Thank you so much for watching. As you can see right in front of your eyes, you can see week by week how my portfolio is doing. Right now, last week, I managed to keep the profits I made back right there, which made profits on some agricultural commodities. It's very, very hard to make any profits on the long side and also on the short side. So if you are making any profits in this market, you are very, very good because you're one of like the top 0.1% of people that make profits. You could think it's easy, like you could long the stocks that go up and all that stuff, but it's actually very hard. It's the toughest environment in this time because it's not clearly bearish nor clearly bullish. We're starting to see some more confirmation on the downside and finally have the purge so we can bounce and resume the bull market. But right now it's really the hardest time, and the only thing you need to do in those times is to survive the markets. It's better to have your account blown up by inflation than it is to have it blown up. So if you don't know where to invest, where to put your money, just be in cash, wait, and that's what I do. I'm mainly in cash, and I'm slowly leaning towards the short side, but steady. It's better to be slow. So you could see my portfolio holdings. That's nothing much to say, anything else to say. We're going to go into the technical analysis, and we are here entering the bear market. Finally, technically, we have been in a bear market on some asset classes for quite some time, but people talk about bear markets when they see the indexes go down. But the major indexes are weighted into the major companies, and they don't represent the average equal weighted market. Like the Nasdaq 100 might be the reference index that people look at the US market with the S&P, but both the S&P and Nasdaq are like overweight in big tech or big stocks. But if you invest, for example, in small caps or mid caps, you would look at this index, but it would not mean anything for you. Right now, what we're seeing is that the Nasdaq is finally moving down. We're seeing Nasdaq making new lows back to its 2021 level, the start of 2021, and that looks very, very bad. You could see that interest rates go up and growth stocks go into the opposite direction. If you look at what happened to I'm going to print ARKK. If I can print it somewhere, I'm going to go for new price scale. You could see that ARKK follows the same path. If you don't know what ARKK is, it's the mega growth stocks, like the stocks that were the trendiest when money and liquidity were pouring into the market. And now that liquidity is being taken out by the Fed, growth stocks were absolutely destroyed. And you could see that what can totally happen is the Nasdaq coming back to those levels. It happened for ARKK. It happened for small cap growth stocks. Why can't it happen to big cap growth stocks? These valuations were pumped by pouring of liquidity into the financial system. Now that the liquidity is being taken out, that's the fundamental side, there is a very high probability that if interest rates, I don't know, hit 5%, that the market is going to understand that money is no longer cheap. You could see that it happened for some stocks and for some sectors. If you look at IWO, which is, I'm going to compare it to the Nasdaq, so it's much more interested to you. If you look at IWO is small cap growth stocks, which is a little more representing the market than ARKK, which is basically one very specific industry. IWO is broad market growth small caps. And you could see that it's back to the pre-COVID levels right there. If I can compare MDYG, which is mid caps growth, you could see they're following the Nasdaq and aiming at this very specific level. I really think that we're entering a bear market on growth stocks. I don't see how companies like Google, Amazon, Facebook and all could start resuming their bull trend without liquidity pouring into the system. You can see stocks going down in every single country the markets are turning down, and you need to be prepared for this. If you look at commodities, apart from oil, that is looking kind of interesting. I'm a little interested into oil because, well, there is a massive shortage around there, and the setup is quite nice when you look at it on the weekly. But you could see commodities starting to resume their to go down. Like this is base metals, the base metals index by Invesco, which is an index of the base metals used in industry. And you can see that we're starting to have a quite strong reversal. It's no longer looking like a correction. It's looking like, could look like a reversal. If you look at agricultural commodities, you could see it's losing a little bit of steam. And why are commodities starting to try to go down? Because many people think we are entering the recession, and when the recession will kick in, commodity prices will crash because demand for these commodities will crash, as it's what recession are about. It's about the economy shrinking and the demand for goods and services going down, thus the demand for materials going down. So you have stocks going down, commodities going down, bonds still are getting absolutely destroyed. I have never seen a bond bear market in my life because I started on the financial markets back in 1718. So I always lived in the way that bonds are the safe haven asset. And now we are clearly seeing bonds getting destroyed. You have the US 10-year at 3.18. And if you look at the broad market for interest rates, whether it be in Europe, whether it be in America, whether it be in Asia, you have a massive issue with bonds, that bonds are getting destroyed. And again, I'm repeating this in every single video. As the interest rate on the bond go up, it means that the underlying value of the bond go down. And you can see clearly that with the Vanguard Total Bond Market ETF, which is a bond index, it's getting absolutely destroyed. And you don't want to be invested. Well, I don't want to be invested in something that's going down. So bonds are going down. So where is the money going? And there is only one place where the money is going. It's the dollar. I know it can be strange. You can think the dollar is going to crash. The dollar is due to be destroyed. But by what the Fed is doing and by the structure of the financial system, the money is pouring into the safe haven dollar. It's not going to euros. It's not going to gold. It's not going to Chinese yuan. It's going to the dollar. And you can see the dollar index to a highest since 2017, and that it really wants to test those 2002 levels. It's highly probable that we're going to test those 2002 levels if the euro dollar goes down. But if you look at the dollar currency against all those currencies, so we're going to go one by one. So you can see against the Canadian dollars starting to look bullish. Against the Swiss franc, huge move up. Against the Chinese yuan, huge move up. Against the Hong Kong dollar, it's pegged, so it's not very interesting. Against the Indian rupee, highest from every time. Against the Japanese yen, highest since 2015. Against the Korean won, looks bullish. Against the Mexican peso, looks neutral. Against the Malaysian ringgit, looks bullish. Against the Russian ruble, that's a little specific thing with what's going around in Russia. Against the Singaporean dollar, looks bullish. Against the Thai baht, looks bullish. Against the Turkish lira, looks bullish. Against the Taiwanese dollar, looks bullish. And that's it. You might have many, many, many more. For example, I was looking at the Hungarian forint, which is the money of Hungary. And yeah, the dollar is the king. So don't try to be smarter than the market. I don't hold money in euros. I hold most of my equity in dollars. Because dollars are going to be are going to be worth more, because the Fed is going to give you more money if you leave your money into dollar and US banks and US bonds and all that stuff, rather than other money zones. Plus, when things start to get ugly, people get scared, and they assume, the markets are telling us that the safest money, according to the markets, is the US dollar, and that you can't deny what the market price. Look at this crazy price appreciation. And if we destroy this resistance, the previous resistance that I marked with those arrows, like the spike on the dollar, there could be like a speculative bubble about the dollar and people going crazy long. And I don't know, it could really be very interesting. That would mean so many things that we don't have the time to cover here, because we're not doing fundamentals, we're doing technical. And last, the cryptocurrencies are also getting destroyed. We are at a crucial support for Bitcoin. I'm really scared. I really believe that deep in my heart. I think that we're going to break this support. I don't anticipate on a trading level, but I can make predictions just on my own for fun. But I never trade my own predictions because it's just for fun. It's like a kind of magical thing. You never believe in your own magic. You don't believe in magic. You just make it for fun. And you see this support that was tested 3 times, and if we break down there, I'm going to be absolutely bearish. That would be the confirmation of a monthly reversal pattern. That would be absolutely terrible for cryptocurrencies, and that might be the beginning of the same thing that happened there back in 14 to 15, or the thing that happened there between 17 and 20. A bear market that will last 1 to 3 years. That will be very sad, but it's how markets move. We had such a great moment back in 2021. So you just have to wait for the markets to happen. Ethereum is the same spot. It's a little bit higher, a little bit more bullish, but still at a crucial support. And if you look at total 3, which is all the altcoins excepted Bitcoin and excepted Ethereum and all the cryptocurrencies except Bitcoin and Ethereum, it's more clear like that. You can see that it's already broken down this crucial support, and the next level we're heading is there, but I really don't have no faith, because when crypto starts to go down, it goes down like crazy because of lack of liquidity. But again, we're not going to go deep into details there because it will take the video too long. So stocks are bearish, bonds are bearish, commodities start to look bearish, especially base metals, but energy commodities start to look bearish. Dollar is going crazy. It's absolutely the place to be right now. And Bitcoin is bearish in cryptocurrencies as a whole. So what do? I try to look at the short side. I have this ETF that is a short Nasdaq ETF, which is like you have the same thing in the US market. You have the SQQQ, which is basically an ETF that allows you to short the Nasdaq. We don't have US ETFs in the European Union, so I try to use European ETFs, and this one does exactly that. If Nasdaq goes down, this ETF value will go up thanks to a, what do we call that? A swap. Yeah, it's exactly that. It's a swap, and there is not that many things to do. I try to convert most of my currencies into dollar in order to be exposed to the best currency in the world at the moment. And I try to short what's possible to short, and anything else, I just don't do anything. I also short cryptocurrencies right now, and I don't have many faith into the market because cryptocurrencies tend to be very volatile during short term, so I don't plan on making my year on this, but it's still some money in the bank. It allows to balance and, to hedge yourself against the other things going down, so it's always good. So that's it. The market looked really bad. It's not the moment to be going crazy into the markets. I hope you are surviving this. If you have any issues with the markets, don't hesitate to share them. Sharing the pain is always a good way to ease the pain. Thank you so much for watching. See you in the next video. Stay safe. Goodbye.